Hello everyone, and welcome back to our channel. There were two very important market signals this week. US July CPI came in line with expectations. The year-over-year rate fell from 3.5% to 3.4%, while core CPI dropped to 2.5%, its lowest level since March 2021. This means that concerns about further Federal Reserve rate hikes are easing. The second signal is the growing divergence in market performance, with some capital rotating out of the Magnificent Seven and into upstream and downstream segments of the AI infrastructure value chain. This market divergence directly validates the core thesis of our previous episode. In the previous episode, we focused on a major theme. The second tier of AI infrastructure is moving from concept-driven speculation into an earnings validation phase. We argued that semiconductor equipment, AI servers, and optical communications remain part of the AI capital expenditure transmission chain, but the market has shifted from indiscriminate buying to careful stock selection. We focused on 5 stocks: AMAT, SMCI, LITE, XOM, and CVX, and provided a specific trading framework for each. 1 week has passed. Now let's review them one by one and see how accurate our calls were. First, let's look at AMAT, Applied Materials. In the previous episode, we noted that AMAT had pulled back from $546.62 to around $522, a decline of approximately 4.5%, and had entered a technical correction zone. Our recommendation was not to add to positions before earnings. If the stock broke and held above $550 on strong volume after earnings, investors could continue holding with $600 as the target. What happened? On August 11th, AMAT touched an intraday low of $522.66, almost exactly matching the $522.12 level we had identified. On August 12th, AMAT surged 4.29% to close at $548.15, after reaching an intraday high of $553.75 and effectively establishing itself above $550. This was fully consistent with our framework. If the stock broke and held above $550 on strong volume, investors could continue holding with $600 as the target. It was a highly precise pullback entry signal. Next, let's look at SMCI, Supermicrocomputer. This was our most impressive call in this round. In the previous episode, we clearly said that SMCI would report earnings after the market close on August 11th, and that the stock could fall to $27.89 or rise to $36.51. Our trading framework was as follows. If the stock broke above $34 on strong volume after earnings, investors could continue holding with a target of $37 to $40. If it fell below $28, they should cut their losses decisively. What happened after the earnings release? On August 12th, SMCI surged 19.02% to close at $37.61. The stock decisively exceeded our $36.51 target and also reached the second target range of $37 to $40. If someone had bought near the intraday low of $30.92 on August 11th, the potential gain by the August 12th close at $37.61 would have been approximately 21.64%. Even an entry on the confirmed breakout above $34 on August 12th would have produced a gain of about 9% by the close. That is the appeal of high beta stocks and also the risk. Next, let's look at LITE, Lumentum Holdings. In the previous episode, we noted that LITE had pulled back from $849 to around $813. Our trading framework was as follows. If the stock rose above $850 on strong volume after earnings, investors could continue holding. If it fell below $750, they should reduce their positions. On August 12th, LITE surged 13.63% to close at $932, decisively clearing our $850 hold trigger. If someone had bought near the intraday low of $787 on August 11th, the potential gain by the August 12th close at $932 would have been approximately 18%. Even an entry on the confirmed breakout above $850 on August 12th would have produced a gain of about 9% by the close. Next, let's look at XOM, Exxon Mobil. In the previous episode, we noted that XOM was breaking out on the weekly chart with targets of $167 and $176, and that the $159 to $160 area marked the early stage of the breakout. Our trading framework was as follows. Aggressive traders could initiate a small position on a high-volume breakout above $160, targeting $167, while conservative traders should wait for a pullback to $152 to $155. On August 12th, the stock pulled back slightly and consolidated around $159 to $160. Our view that XOM was in the early stage of a weekly chart breakout was broadly accurate. The stock repeatedly tested the $160 area without a significant decline. However, near-term upside remained limited. Finally, let's look at CVX, Chevron. In the previous episode, we noted that CVX was trading between resistance at $204.77 and support at $171.86, making it suitable for range-based swing trading. Aggressive traders could initiate a small position in the $195 to $200 range, targeting $205 to $215, while conservative traders should wait for a pullback to $185 to $190. On August 12th, CVX pulled back slightly to $196.60 and continued to trade within a narrow $195 to $197 range. Our assessment that the stock would remain range-bound was entirely accurate. To summarize the results, SMCI and LITE were the biggest winners of this earnings season, with both stocks posting sharp gains and fully validating our view that they offered strong, high beta potential. AMAT's precise pre-earnings pullback supported our view that the equipment CapEx cycle could continue. Driven by oil prices, XOM and CVX consolidated near their highs, although their near-term upside remained limited. Now that we have reviewed the calls from our previous episode, let's discuss exactly what to do next. First, AMAT. UBS had previously raised its price target sharply from $570 to $705, while the average Wall Street price target was approximately $667. AMAT will report earnings after the market close on August 13th. If third-quarter free cash flow improves and fourth-quarter guidance is strong, the stock could have room to move toward analyst price targets. We recommend a medium-term holding period of 2 to 4 weeks, with investors waiting for post-earnings confirmation before building a position. The first target is $590 to $600, and the second target is $625 to $667. Set the stop loss at $500. A decisive break below that level would invalidate the bullish structure. There are two conditions for adding to the position. Enter on confirmation if the stock breaks and holds above $560 on strong volume after earnings, or scale in on a pullback to $520 to $525. The key metrics to watch are third-quarter free cash flow, fourth-quarter revenue guidance, and whether the equipment CapEx cycle continues. Next, SMCI, Supermicrocomputer. At $37.61, SMCI has already broken above the previous key resistance level of $34, and its near-term momentum is very strong. Institutional views are clearly divided. Citi raised its price target from $33 to $39, Needham maintained its $46 target, and Rosenblatt raised its target to $51. The risk is that management guided to a gross margin of only 10.4% to 10.8% for the next quarter, implying a return to normal levels after one-time factors fade. We recommend treating SMCI as a short-term trading vehicle with a holding period of 1 to 2 weeks rather than as a long-term position. The first target is $40 to $42, and the second target is $46 to $51. Set the stop loss at $34. A break below that level would invalidate the breakout. Next, LITE, Lumentum Holdings. At $932, LITE has decisively broken above the key resistance level of $850. Following the earnings release, institutions raised their price targets across the board. The Wall Street consensus rating is strong buy, with an average price target of approximately $1,148. Needham noted that Lumentum has been its top pick for 19 consecutive months. We recommend a medium-term holding period of 2 to 4 weeks. The first target is $1,000 to $1,040, and the second second target is $1,100 to $1,230. Set the stop loss at $850. A break below that level would invalidate the breakout. Conditions for adding to the position are a pullback to $880 to $900 or a confirmed high-volume breakout above $966. The key metrics to watch are the progress of NPO order conversion, the sustainability of demand for optical communications, and whether gross margin can remain above 50%. Next, XOM, Exxon Mobil. At $159, XOM is in the early stage of a weekly chart breakout. We recommend a medium-term holding period of 3 to 6 weeks. The first target is $167 to $168 with a stop loss at $149. A break below that level would call the bullish structure into question. One particular risk should be emphasized. If US-Iran negotiations show progress, oil prices could fall quickly, weakening the bullish case for XOM. Finally, CVX, Chevron. At $196, CVX is trading between resistance at $204 and support at $171. The first target is $205 to $210, leaving very limited room for the trade. Set the stop loss at $190. A break below that level would invalidate the near-term bullish structure. CVX's near-term performance is highly dependent on oil prices. Finally, I want to emphasize several points for retail investors. First, the core principle of earnings season is to validate rather than predict. Taking a large position before an earnings release is essentially a gamble. The real trading signal comes from post-earnings confirmation in price and volume. AMAT will report earnings after today's close, and we recommend waiting for confirmation before making a decision instead of placing a blind bet ahead of the report. Second, different stocks require different strategies. SMCI and LITE have already posted sharp double-digit gains, making it extremely risky to chase them in the near term. SMCI rose 19% in one day, while LITE gained 13%. After moves of that magnitude, it is better to wait for a pullback or a confirmed breakout before entering, rather than buying at elevated prices. XOM and CVX are in the early stage of weekly chart breakouts and are suitable for medium-term positioning. AMAT is in a critical pre-earnings window where patience is more important than entering early. Third, always set a stop loss. We have provided a clear stop loss level for each of the 5 stocks. This is the last line of defense for protecting your capital. Fourth, focus on the key fundamental drivers. For AMAT, watch third quarter free cash flow and fourth quarter guidance. For SMCI, watch whether gross margin can continue to improve. For LITE, monitor progress in NPO order conversion. And for XOM and CVX, watch oil prices and developments in US-Iran negotiations. Disclaimer. The above content is solely an objective analysis based on technical and fundamental factors and does not constitute investment advice. Investing involves risk, so please exercise caution and make your own independent investment decisions based on your risk tolerance. That's all for today. If you found this content helpful, please like, share, and subscribe. See you next time.